Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Alright guys, Monday. The camera is messed up. Look, I switched my desk out finally. So we're kind of be messing with the camera, okay? Stick with me though. Let's go to the charts first. Got some auto rollover notifications. I can tell that that particular screen needs to be adjusted a little bit. Where's my volume profile here? Okay, so here we got the treasuries. We got a pretty decent downtrend here this morning. Not really sure what's causing that. We can investigate a little bit. S&P 500 about where it was after that drop and recovery on Friday. Oil still where it was. Gold and silver, well, meandering. Again, gold and silver haven't been following the treasuries as closely as they used to. And, you know, they kind of got these hints of like, well, we could run, but they're not. They're not. Kappa not looking so hot. And then we got the Japanese yen here. Japanese yen looking a little scary this morning, guys. That's a little scary. And the dollar index back up to 105.04. And then we got Bitcoin. Bitcoin looking a little, you know, remember when they were like, oh, we're back above 7,000. That's cool. Yeah, good times, good times. So that's basically where we're at. Okay, what should I deal with first? Okay, so first thing is that screen, this screen right here looks great. This screen doesn't. So I want to adjust that. Then we'll adjust the camera. Okay, well, that's a little better. It's kind of like too wide. Still needs to come over. This is like the center. By the way, good morning, Apol, Jake, Mo, Shaban. That's a new name. Welcome to the stream. AO, welcome back. You need to move this over. Also, this light right here, because it's further away, I think it needs to be a little bit brighter. Yeah, that's maybe too much. Let's just go to 40 for now. That's better. I use 3 screens, but one of my screens is like just streaming and Twitter. So, well, streaming. Actually, do I don't even think I have a scene set up so that you can see it, but doesn't matter. It's just OBS, Twitter, and Discord. So you got 32 inches. Well, I tell you what, with the way that I got this set up, I could get bigger monitors. I wish I could show. Actually, I can show you. Do you want to see? Let me see if I can show you the desk here. Oh my gosh, it makes such a difference because the desk it's about the same width, which is like 78 inches or something like that. Like it's super, super wide. But this desk is 3 feet deep, whereas the previous desk was only like 2 feet, if not 1.5 feet or something like that. Anyways, so that depth allowed me to like move a lot of the peripherals in front of me, like have a keyboard and stuff. It was always kind of like way over here, and now it's like in front of me. So for instance, the over here, if I want to use my pen, you know, I just have to reach for it. I don't have to like rearrange a bunch of things on my desk and stuff. So that the desk itself is making a big difference. It does put the monitors further away from me, and we'll see how I feel about that, I guess. The thing is with the way that it is now, because I was able to move these peripherals up, I've got like more than 1 foot of just empty desk space on each side. I also must say, the way that the light in this room reflects off of this wood is just so nice. I mean, it is birch, so it has a little bit more contrast in the wood than you would maybe like, you know, but it looks so nice. The other thing is the camera's further back, right? So I have it at like 50 millimeters now when I usually have it at 35. But I also have it peeking up over the monitor. So I have not moved this monitor down. Like normally it's down. We could do that as well. I mean, I don't know. You don't really need to see this much of my head, right? It's the thing. But before I mess with that, I wasn't able to finish breakfast. You know, just everything was discombobulated this morning. Let's see here. What was AO saying? I got indexes on one screen and treasuries on the other screen, and I needed a screen for charts. Oh, well, I don't know. Like with the way that I have things on my like if you use the default, font size for Jigsaw, you could probably fit twice as much stuff as is on my screen. And I really think that you cannot keep track of more than 2 screens of stuff in terms of like watching the markets and doing all of that sort of a stuff. Now, when I was at Goldman, most people, they had 3, and there was some guys that had 6 screens, but they had other things that were going on. Like they would have multiple computers, and some of those computers would be running like different like very, very process intensive algorithms and things like that. And so they needed those extra screens for that. But yeah, the way that I do it, 1 screen for my DOMs, 1 screen for my charts. And you do want a screen that you can put a bunch of different charts on so that you can keep track of correlations, just like AO was saying there. Yeah, see, the problem that I got is with the camera as high as it is, you get too much up here, right? If I were to angle it down, then you wouldn't be able to see the banner behind. So let's see here. I go and grab my little head thing. I'm noticing my head is like right here in the middle of the Evangelion DVD set. So I'm gonna go and grab my head. My little I can try and adjust off of that. Okay, well that's a lot better. That's better. And moving that monitor down like I had before is no problem either. I am kind of wondering if I should just, instead of using their, I've got a small rig. No, not a small rig. I've got an Elgato thing that clamps on, but I'm wondering if that's so close from the edge of the desk now that I should just put a little tripod up there. Okay, well, my oatmeal's probably cooled off now, so I should eat that. Actually turn the camera off for a little bit so you don't have to see me eat. You changed by changing the angle? I don't know what you mean, but is it better? I could actually get it even lower, probably. Okay, so Mo Shaban asks, I went through the strategy PDF file a few times, but I still don't understand how we can determine the flow of each session and have a daily bias. Bias, by the way, thank you for sharing it. It's amazing. Thank you very much. Okay, so totally understandable, because a lot of this is coming in every day and seeing what moves things. So I actually don't even have my my thing up. Let's go bring up our command line. No, that's not what I wanted. I wanted terminal. There we go. Put it down here, resize it a little bit. Okay. That Friday was the 14th. Okay, so what do we got going on today? Well, first of all, it's Monday. Flows tend to be slower. Okay. So just overall, so I always kind of try and go into seasonality things first. I usually think about, well, maybe not. Either first or last. Kind of depends on if there's something really major going on today. But today, there's not as much going on. So we got Monday flows tend to be slower than other days of the week, okay? Most active days of the week are Wednesday, Thursday, okay? And sometimes Friday. Friday is either really, really active or not as active. Monday, Tuesday, a little bit slower, okay? Also, we're in summer flows. So between Memorial Day and Labor Day, okay, so basically June, July, August, a little bit of September, there tends to be less liquidity in the market. Things tend to be slower. So liquidity this year in the treasuries overall has done better than it has in the past. So that effect seems to be much less than it used to be, but it's still there. And you'll kind of notice that we've had a lot of days lately where the treasury stays within like a 4 to 8 tick range. And it's really, really tight, tough trading. Okay. So that's what we're seeing right now, is we're definitely seeing summer flows. Okay. Now, when we come to like, what are some news events that we got going on today? Well, there is 3 and 6 month bill auctions, and we do have Fed speakers after session. Which, when I say after session, I mean after my session. So at noon Eastern time, essentially, we've got Williams, Harker, and Cook all speaking. Okay, RBA rate tonight. Oh, we did have New York Fed manufacturing, so we should add that on there too. New York Fed manufacturing less negative than expected. So that would be a downward flow. So sell treasuries. I don't always write that part out right, but that's something that would probably be a sell, right? So now, next is I'm gonna look at like this week. Do we have some stuff later in the week that they might be waiting about? Okay, well, yes. Tomorrow, retail sales tomorrow. Okay. So, what I see is a relatively slow market coming back from the weekend, not a lot of catalysts to run off of yet, and retail sales tomorrow, which is a relatively major point, and especially since right now the concern is more about growth rather than inflation. And so retail sales is going to be one key component of the growth thing that people are going to be looking at. Okay. So that is like my synopsis, or at least the things that I know of that could potentially contribute to flows today, right? And my general take though on it is market likely to be range bound. Right. So today, since I don't have a strong imbalance, I don't really have a trade. If I were to guess though, I guess one thing that I can put out there is, if we come back to a chart of the treasury, well, at least right now, we do have some downside momentum. Well, let's not say momentum. Let's say right here, this is a point at which I would expect some mean reversion pushing us down. Okay. Oh, and I'm not showing you the chart. You see here? So like when we kind of go back, there's just been this area here for a long time. Actually, it's probably better to look at it on a daily chart here. Okay. So we've kind of broken to new highs. We're like above all of the moving averages, and you can see some mean reversion coming in. So, and the action in the first little bit of the session has been down. So if I were going to guess, I would think that we might be able to move a little bit further down, but overall, I don't really have a strong opinion about which way we're going to be going. So by imbalance, well, do you mean strong news pointing in one direction? So kind of, right? So I'm not so concerned about the news as it is what kind of flow that news will prompt, right? So sometimes you will have a situation where you have news and it's something like an 8 o'clock news, like a PMI or something like that. But the PMI ends up being in line with expectations or maybe slightly hot, and the market just kind of yawns at it. And then after the news is done, then you start to see a move the opposite direction of what you would expect the news to drive, right? Like it's hot. So you would think that the treasuries would sell, but the treasuries actually buy. And you're like, what the heck? But then you find out that we're like the end of the month and there's a strong imbalance long because risk parity funds have to buy treasuries in order to maintain their balanced 60-40 portfolio for the end of the month, right? So especially when you get to the things where like the really big funds have to adjust because of that thing, those can result in really, really strong flows. And so that's where you would get a situation where the flows would be short in spite of whatever the news would be, right? That's why we kind of have to combine all of those things. We list them all out. And then from there, and I guess part of that is just based on experience, we can kind of game out like, okay, this thing is long and this thing is short, but I think that this thing is going to drive a lot more flow than this thing, ergo I'm going to go this direction, right? So, and that's part of like what I try to do here on the stream is I go through this process, and after a week or two of, or a month, let's say a month of that, you should have a pretty good idea of how I judge those things, because you're sitting here doing it along with me. Remember, like your brain is kind of like a chat GPT in many respects. Okay, it's a machine learning neural network, and all of the things that you are looking at and thinking about and consuming, that is the training data that your brain uses to rearrange neurons and make different connections and stuff, right? So as you watch the stream, and I wouldn't expect most people to watch the stream forever, right? But you watch the stream for like a month or so that you've seen all of the major news events that happen on a monthly basis. And as you do that, you're watching that training data and your brain will align, and all of a sudden it'll get to the point where you just know you won't even think about it. You'll list all of the things and you'll know the answer because your brain just does it. I guess one thing I could also say is like, ideally, I would have a computer program. It would be a really complicated program because I would need to do something for like every piece of news and every piece of things that I know that drives flows. But basically, it would go through all of those things and predict how much flow it expects to see that day based on that thing, and then adds them all together. Right? That would be a really sophisticated calculation. What we're doing is we're just kind of guesstimating it using our experience with markets. So it could be a mechanical thing, but it's too complicated to be a mechanical thing. So there's a little bit of experience and intuition involved in it. So I'm a little torn on if I want to adjust the camera again. It could be moved a little bit over, but I don't know. I'm gonna bring this over here. Hold on. When I'm looking over here, how do I look? Yeah. A little bit more this way would probably be better. Why don't we see all limit orders filled and we see market moves, especially in the currency market? Well, so in the currency market, you got to understand that the currency market doesn't run on an exchange. The currency market is basically all over the counter between individual participating banks. And I guess there's a couple of Forex brokers and stuff like that involved, right? So when you, as a retail trader, trade Forex, you're basically trading against your broker who will give you a bid offer, right? And then your broker will then go and reconcile it and trade it against other banks over the counter. So because it's not on a central exchange, you can't see how many limit orders there are or anything like that. You can just see the bid ask that the various participants are offering. That's it, right? In the stock market, that information is available, but most people don't get the data feed. Okay. Now, is there some conspiracy? Well, I don't know, maybe. I do kind of wonder. I don't think that the GameStop people and all of that would do some of the things that they do if they were looking at the order book, especially in GameStop. You look at the order book in GameStop and it's like, these people are nuts. Once you realize how easy it is for them to move that market, it's crazy. But at the same time, it's also very sophisticated data. It's a lot of data over the pipe. I mean, we're talking about an amount of data coming over the wire that, like, you know, in a really strong move, my computer can have a hard time dealing with all of the data that's coming in. So if my computer has a hard time, you know, processing all the data, imagine how many resources it must take to send all of that data to thousands of people, right? It costs money. And so that's part of why the data isn't really available to everybody. As we get along and technology becomes better and bandwidth becomes cheaper and all of these things, I'm sure that it will become more and more common. And perhaps when I'm like 60 years old, everybody will have level 2 data on stocks for free. That would be awesome. Maybe. So I think that's what you were asking. I think I'm going to try changing things up again. Yep, I think so. Oh, yeah. What do you think? I think that's a little bit better. Need to move it just a little bit. There we go. I'm liking that. Maybe a little bit too high. Although if I'm sitting up straight, I'm really sitting up straight, then it's perfect. Let's see here. Mir says, yeah. Oh, you're saying yes. That was an answer to your question. Okay, cool. Sometimes I have to, make a little bit of an assumption about what you're talking about. I understand. Like, it's chat. Not everybody's a super fast typer, and you can only put in so long of a message, and then if it was too long of a message, then people wouldn't pay attention and wouldn't want to read it. Yeah, I get you. What PL/DD minimum do you normally need for a system? What does PL stand for? Profit loss / drawdown minimum do you normally need for a system to be good enough? So it's interesting. I don't think about it in those terms as much, but so here's the thing. Let's say that you have a system and it has a drawdown of 50%. So at one point the portfolio is down 50%, but then over the course of 10 years, it goes up 10, 20, 30 times its value. Okay. So when you do that, that's going to be a system with a really good Sharpe ratio, and that's going to be a system that a lot of investors want to invest in. No? So it kind of comes to like, it's not just like what your drawdown is, but what your drawdown is compared to your reward. But we're retail traders and we have limited capital, right? 50% drawdown might be more than you're able to take on, right? So if I do a strategy and I'm back testing it and everything, and I'm going to look at what's the drawdown in terms of ticks, right? And then how big is my portfolio, right? And if the drawdown of that is larger than the value of the account that I want to trade, then I can't trade that strategy, essentially, right? Because eventually you're going to run into that drawdown and it's going to blow out the account. I think that there are some systems that retail traders are using that like work overall, but the drawdown on them is too big for their accounts, right? Like the sort of market making strategy that people are generally doing. So you gotta be really careful, because there's this whole thing that like people think that because this system works, that means that like their setups and their technical analysis stuff works. But really the performance of these systems have a lot more to do with the amount of risk that they're taking on. They're basically making money in exchange for taking on risk. And when you do that, it is like an overall profitable strategy in the long run, but the drawdowns on them are extremely steep because they're so fat-tailed. So when you do eventually run into that period, you just get slaughtered. So it's really not an appropriate strategy for most retail traders. Like, it's really, you take those kinds of risk reward sort of setups, and then you combine it with something like arbitrage and robots that are able to get to the front of the queue and a really, really big wad of cash, and now you have something viable, right? So that's what I would look at on drawdown. But for retail traders, especially if you're trading discretionarily, what I would say is that the thing that will help you learn the best is to have equal risk reward. Because if you have something where your stop is much, much larger than your target, you're going to hit a very high win rate because of that, regardless. And you're probably going to see a reasonable amount of success regardless. But the problem is that it's kind of lying to you, right? Your brain, it loves making the money, and it just wants to make the money. And it kind of trains you the wrong way, honestly. Like, so going back again to these people that they just take on risk, it's so common to see traders like this just completely blow out. And you gotta wonder, like, why do they blow up so easily? Well, because can't they just say, oh, I'm in that drawdown. This is a market that is not favorable to my strategy, ergo I shouldn't trade, right? Well, but the problem is that everything that you've been doing has been training you not to. And you haven't been training to deal with the drawdown, to deal with the losses, and to be able to handle that psychologically and be able to stick to your analysis and being able to do what you're supposed to do, even when your brain is kind of a little unhappy about what's going on, right? Because when you lose, that releases chemicals that like straight up make your thinking worse, right? So that's those kind of the problems with those. So I would prefer something that has a pretty even risk reward and actually has a decent amount of variation. So the more variation in your strategy, in order to draw a thing. So if you don't have a lot of variance in your strategy, then you tend to get fat tails, right? And it's like this. And yeah, maybe over a long enough period you'll make money, but like, was it worth it? Yeah, maybe. Versus if you get something that's a little bit more like this, right? Then more variance, okay, but much more consistent, and the strategy is more likely to last in the long term because you're able to see the tails, and the tails aren't like the end of the world. So that's what I would recommend. What's the difference between your profits from day trading and investing? Oh man, this is my least favorite question to answer, man. You don't have to know. That's a funny name. So the reality is that you will make more money from investing long term in an index fund probably than you will from day trading. Yeah, so I don't like to answer that question because like we're all here to day trade, and then the question is like, well, why are you day trading? Well, I'm day trading because I love doing it and I want to be involved in the market, and I find that being involved in the market gives me a perspective on the market that others don't have, and it improves my longer term investing. For instance, for the past 3 years now, I've been able to, with my 401k distributions, investing into an index fund, but investing strategically, I have been able to beat the index fund return for the year because I'm able to know when it's like at its lows and its highs and invest at the best time of the year. Right. And I'm only able to do that because I'm watching the market every day and I'm keeping track of all of these flows and things like that. Right. So like there are benefits to day trading, and there is like a long right tail for day trading. You know, if you're lucky, one of those 1 in 100 or 1 in 1,000, you can make like insane amounts of money from it. Okay. But more generally, I would say that day trading is really for people that want to be really involved in the market, and it's not for people that are trying to maximize their capital gains. If you're trying to maximize your capital gains, or let's say maximize your capital gains for the risk, there's probably better strategies, right? If you're trying to get just the best risk adjusted return, then you should probably just invest in index funds. If you're trying to get the largest return you can, you probably want to go into private equity. How do you decide which product to trade today? Sometimes I trade CN and it doesn't move, but I see ZB is sinking and vice versa. Oh, okay. So I always take my trades in ZN, but there can be an advantage to switching products, especially if you have a large enough account. So the issue here is that, like, I'm taking one contract in ZN, and that's like acceptable risk to me. Like, okay, fine. If I trade over here in the micros, you know, I trade one in the micros and $10 make or lose is like fine for me. I'm trying to minimize my risk. Right? Now I could switch between the 2 and the 30 year, but then the 2 and the 30 year don't have as much liquidity on them. Otherwise, I probably would. Okay, and how would I decide that? Well, what I need to determine is which way the spread is going, and then which way the outrights are going, right? So if I come over here to my charts, I have my spread down here. It's not really doing a whole lot, but you can see that there's a slight upward curve to it. Okay, so that means we are steepening. So let's just assume for a moment that that upward curve in the yield curve was really, really strong. Okay, and we knew, you know, for certain that we were steepening and that we were likely to steepen throughout the day. What does that mean? Okay, so just remember, steepen means up on the chart. Okay, so I have my treasuries over here set up the same way, so that steepening means up. So if I, you know, recenter my DOMs and wait a little while, eventually I should see that my 5-year is higher than my 30-year. Okay, and then based on that, now I kind of know what does it mean. So if I'm going long because it's a steepener, then that means I'm buying the front month, the 5-year, and I'm selling the back month, the 30-year. Or if I'm doing the knob spread, I would buy the 10 and sell the 30. Okay, so there's a buy and there's a sell. And then I need to know, are we moving up or down? So right now we're moving down. Okay, so I want to sell. Remember, it was buy the 10, sell the 30. So if I want to sell, I would sell in the 30 right now. Right? And if I wanted to buy, I would buy in the 10 or the 5. And that's how you can sort out which instrument is best to trade based on which way the spreads are going. Now, that kind of assumes that you know which way the spread is going to go, which is sometimes more tricky than you'd think. But because there is a lot of trendiness in the yield curve. Like, as of late, we've been steepening a lot. There's some trend steepening, and so you have a pretty good bet right now if you take a steepener to make money from it. But that doesn't mean that it won't come, that the spread won't come back 2 ticks on you while you're in the trade. So boring today. I never ever committed on Monday. Yeah, you know, when I first started trading, Mondays and Fridays were my worst days. Fridays, I think, is because, you know, there was 1 or 2 non-farms that where I was dumb and I took like really, really big loss. So that's the first thing, is like avoid trading during the S tier economic events. But then for Monday, it was just, we just won't trade Monday because there's not a lot of strong flows for us to jump on board and do that with. I will keep a daily diary. You know, I don't ever go back and look at these. Maybe we'll come to a point where we're like, oh, what was going on this day? And we'll go back and find it in our notes. The stream is kind of my diary, right? I need to move my flag so that the flag is below the scroller. Yeah, you know what? I really just like using a text editor. Like, once I got everything set up to really be the way that I want it and everything. I can move around and type whatever I want, and it's just like a free flow state. There's never this, okay, wait, I need to go up to here, so I'm going to take my mouse and go and click up here and move it, and then move my hand. Or I have to move my hand and use the arrow keys. With a modal text editor, it's just like I stay in the flow the whole time. And I really like that. And so I think that somewhat for me, the taking the notes, the real benefit from the notes is that it keeps me more focused and more organized, and not necessarily because I ever go back and look at them again. You know, and it's really useful for you guys to be like, you know, for me to be able to come in and write it down, right? So yeah. Let's see here. So I've been going with this setup for a little bit. I think it's okay. I want to adjust it a little bit more now. So first of all, I can get this monitor a little higher. Okay, and I can adjust that so that the mouse goes correctly later. And then I'm going to actually, I should have done the monitor last. I'm going to tilt it down, just the camera down just a tad. Don't think that it's oh, that's better. That's way better. I don't think that it's quite the right way. I also think that it's not as bright because I am using a more zoomed in focal length. Maybe that is the, we just need to get the 50mm prime lens, and then it's super sharp. And get one that's got a really big aperture size so we can get a really blurred background. What info do you take from the 6E? Oh, you're probably noticing that because you're looking at this chart right here and you see 6E, right? So to be honest, I don't pay attention to the 6E very much. What I'm paying attention to here is the dollar index. So I have an indicator that you can purchase at speculatorseth.com. You get a 2-week trial, and then it's $100 for a lifetime license. So super cheap, because I think it's something that everybody that owns NinjaTrader should have. And basically what my synthetic dollar index does is it calculates the value of the dollar index based on the CME FX futures. So because, you know, they're futures and all those things, it is going to be slightly different from the real dollar index value, but like the movement and the degree of movement is going to be the same. And so I watch the dollar for moves, and those moves in the dollar are very often correlated with things in the treasuries. And occasionally I will go, yeah, it duplicates DXY. It's not too that, you know, it's going to be like a point or two off because of the futures, but because of the basis difference in the futures, but close enough for our purposes. Anyways, sometimes I will come up here and look at the 6E and be like, okay, there was a move. Was the 6E moving? But treasuries are much, much, much more correlated with the Japanese yen. So over here on my other screen, I have a chart of the Japanese yen. And I'm watching it, and I have this, you know, in Ninja Trader, you can kind of do this thing where when I put my cursor on one chart, it will show me the same spot on all the other charts. So then I can kind of see and be like, okay, well, we had this last little slight move lower. When that happened, was the Japanese yen going with it? It wasn't. So it's not the Japanese yen that's driving the treasuries at the moment. But there was a drop in the dollar. There was a drop in the dollar. And I look right there. So it looks like in this instance, it is the 6E that's moving us. And that's probably because there's like political turmoil in Europe and all of that sort of stuff. And that's kind of hitting their bonds. And don't 6E and 6E, yes, they tend to move in opposite directions. Yeah. In that instance, the dollar dropped and the 6E moved up. Now, the correlation between the treasury and the dollar index, that's complicated. And I'm not very good at guessing which way they're going to be. But you can definitely see when a move in the dollar is actually driving everything else. And I think that that's really important to know. Because when it's the currencies, when it's the currencies that are driving the action, you can see prices move on very little volume. Because what most of these market makers are doing is they're watching correlated instruments. So if I was a market maker in the treasury, I would probably be watching the Japanese yen, and I would be watching the level 2 in the cash treasuries. I'd be watching the equity indexes. I'd be watching other bonds, like I'd be watching the bond and all of you, right? Now I can't keep track of all of those things as a discretionary retail trader. I have as many of those things up as I can and I can keep track of. But you know, if I was a robot, I'd be looking at all of those things and then I'd see, oh, this other instrument ticked down, so now this instrument is overvalued compared to that instrument, and so I should sell this instrument, or whatever the deal is, right? So when the dollar is moving, all of these robots, they're going to do that very thing, because the robots, they don't necessarily use market orders. I mean, there is some of that, but you know, a lot of what they're doing is they're just saying, what's the best price? What's the best price for me to bid an offer right now? And so when the dollar moves, they just adjust their bids and offers. And that's why you might see the instrument move. And it's like mostly from stacking and, you know, it's mostly pulls and not a whole lot of volume is required to push through it, right? That kind of situation can be really difficult for us to trade. Unless you know that a trend was coming in the dollar, right? But those are the situations that will screw up order flow traders the most. So that's why I really, really want to keep track of that. The dollar's moving, I'm kind of like, right? Because all of these other things move and you think, oh, there's a trend up in this and a trend down in this. But then when you realize that actually the value of this didn't move at all, it was just the dollar moved. That's why I think that indicator is so important. It's like how, especially with commodities, like if you're trading gold, oil, copper, you know, these sorts of things. How are you trading without knowing what the value of the currency you're trading in is doing? Makes no sense to me. But if they move in opposite directions, why do you need to use that indicator? Oh, well, because the dollar... So you're correct that if I have a chart of the 6E up and the Japanese yen, that is a strong enough... those are the biggest components of the dollar index. So you can do pretty good with just those instruments. It's true. You can do pretty good with just those instruments. But there are some things that you're going to see in the dollar index that you will only see if you actually have the dollar index up. There can be certain certain levels that are like important, like high time frame levels. I want to look up intraday stuff, but like when you're looking at significant daily levels, that it can help there. And I find that watching the dollar index kind of for some reason gives you a better idea of when it's turning around for some reason than the individual currencies do. So I guess that I would say I think that the dollar index is the most important indicator that I have in that indicator package, but it's not the only thing in there. You get a bunch of stuff. It's a bunch of indicators that I wrote from doing stuff on the stream that it was like, platform is missing. Like these spread charts over here. I have a free version of the spread chart, but then the issue that I had was like every time that you rolled over, you had to come in and modify these and tell it to change the month. And then it wouldn't work when I come over to like a daily chart and I wanted to put the spread on the daily chart. It didn't work. And sometimes I wanted it to be like a line and sometimes candles. And sometimes I wanted to like calculate it different when it was live. And so that's what the advanced version of the spread indicator is, for instance. And then the other one that I rely on really heavily is you might hear click sounds. A lot of people think that it's like a glitch with my audio, but it's a sound that this is making. So when there are really large changes in the depth of market, I actually haven't had any big changes in the depth of market on the Treasury. Okay, but when you do get those, it'll make a click, and that kind of alerts me that somebody stacked something big there or something like that. So that's another one that I rely really heavily on. That's the scenario where the average Joe and average Jane loses. Oh, you must have been talking about when I was saying a move that's driven primarily by the currencies. I wouldn't say the average Joe and Jane, but your average order flow trader, yes. Your average order flow trader will be like, why is it moving like this? Because I'm not seeing cumulative delta move. I'm not seeing a ton of volume. It was like just fine there, a little while ago. And now all of a sudden, the bids are just melting underneath of us. What's with that? What's with that? That's a basic feature that Jigsaw needs to have. Totally. Yeah, I don't think that Peter is watching today, but Peter, add the market depth tape. You can totally steal it. 100%. I have no problem. You steal it. Go ahead. Well, I was kind of stepped up to the plate there for a new low, and Octavius is going for the short. It would be very curious to me if we did get a breach of these lows and a little bit of a washout, but it still looks to me like it's pretty range bound, and in fact, I'm concerned about a false breakout here. The trend is down, though. If there is a strong imbalance short, it could continue going for a bit. Actually, I think that we might get like 1 or 2 ticks here, but it will still be super slow. Because when you look at the cumulative delta, I mean, it is pretty persistently short in the 10-year at least. Not so much in the 30, but yeah. I think if it wasn't Monday, I would maybe take that one. Okay, so let's see here. What was the other thing oh yes, my camera, because I'm using the closer focal length, it changed the aperture on me, so I'm gonna see if I can fix that. I might not be able to. Okay, so that looks better on the brightness. I'm a lot more zoomed out, but maybe that's okay. I don't know. That looks more... That looks more genuinely me. This is more real to like my proportions and stuff in real life, right? Like I'm a really thin guy, even though I'm working out. I'm pretty, I wouldn't say super shredded, but like I've got decent definition right now, but I just don't bulk up. I'm very thin framed, and I think you see that in the camera right now with the wider focal length. All the people that are in agreement to keep this camera angle. Well, what I had to do was I had to zoom it out a little bit so that it would let me go down to the larger aperture opening. But I can go and get a 50, or maybe even more than that. And oh, look, while I was doing that, we did break by about 3 ticks. Okay. So if we were to, so I did say, I was like, well, I'm worried about a false breakout, but then I also said, well, we might break down a little bit, but I think that it would still be pretty slow, right? So that was maybe a tick more than I thought, but you know, okay, 3 ticks. If they really keep going, then I'm definitely wrong, right? Then I'm definitely wrong. But on that move, we did see the Japanese yen fall with it as well. And a little bit of a move in gold. Well, I don't see any news, so I do think that it was just kind of a little bit of a stop run, I think. How much was it, though? 10,000? Okay. 10,000 contracts washed out. Some strong stacks as we moved, though. Now that kind of perks my interest a little bit more. And where are the yields at? 429, really? Okay, so those stacks kind of pulled off a little bit. I'm still seeing some pressure on the downside though. See that right there? There's, as she goes, or let's say after she goes absorption at 11. That's kind of more of a 50-50 here though, I think. But that means there is somebody big selling. You only took 3 from that? Not 4? Oh yeah. That like exact kind of situation is the one that I think I have like the most PTSD about though. You know what I mean? There's a significant difference. Yeah, you know, so when I'm coming over here and I'm looking at this, like, okay, we've moved down a little bit, but, and we kind of have been dancing around 4.25, but that move down was a little bit larger in yield than I anticipated. Getting back to almost to 4.3. But I think down here we were like almost at 4.5, so like kind of. I kind of wonder if the S&P 500 starts reacting to that too. You know? Every time that I look at the camera, I'm like, is it perfectly level or is it a little bit like big bids, 10 little? Oh yeah. But it's been stacked like that for a long time, hasn't it? I don't think I ever got a really big. Maybe I need to bring my filter back down to 1,000. Maybe 1,500 is too much. Well, they're definitely building a pretty deep hole at 11, man. It's already been 6 minutes, and they've been stuck there at that price the whole time. I need to show you my, Oh, you know, I don't have my phone over here. Hold on a second. Okay. I will just send these. Oh, I wish I could do justice. I don't think a picture will do justice to the way a really good, nice piece of wood looks in person and feels. Oh my gosh, like that surface just feels so good. Oh my gosh. But I can show you. I'll show you. At least the best as we get. Oh, fine. Download it. There we go. So check it out. So because the table is 3 feet deep, see how I'm able to get like all my audio equipment like out in front of me? I even have room for my fight stick. Like, isn't that crazy? And then there's like all this extra room still. So it's nice. And then, oh, can I zoom in? The wood just looks super great. It's just such a rich brown. It's birch, so it's not like the greatest piece of wood. You will get these areas like right here that just like suck up a lot of dye and stuff. So there's a lot of contrast. Some people might not like that. But I think that it just adds so much character to the room. It looks so much nicer. And I think that whole setup is just like way more impressive too. I don't have my plant. I'm thinking about if I should just put my plants on the desk right here. But I moved one of them out because I didn't feel like it was getting enough light there. I'm kind of tempted to like flip the room around, but then nah, that'd be a bad idea. That'd probably be a bad idea. Then you just have the window behind us. That'd be annoying. That mouse pad has seen better days. I think I just need to clean it. It reflects light in a strange way though. It's I forget what they call it. It's like the glorious PC gaming ice something such and such pad. And so it really glides. Like you leave a mouse on it and like the mouse will just move on its own. At first, at least. And I think it's only like 2 years old, too. But I do need to clean it off a little bit. I think I do need to clean it off a little bit. But the reason, the way it looks is primarily because of the way that because there's yeah. Oh, that is so weird, dude. So that looks like it's a fabric mouse pad, but it's not. It's like it has a rubber on the bottom of it, but then the top of it is like a hard, slick surface, and in a surface that really reflects light too. Yep, I got a tractor. It's kind of weird, that whole thing, because apparently they're not doing too well right now. Native Instruments is my understanding is apparently Native Instruments isn't doing too well. That when Pioneer in particular put out their controllers, that really took away from a lot of their market share. And in particular, people want a DJ setup that does not connect to your computer, because the way that this tractor works is, to use the decks, all of the music is stored on your computer and all of the processing is done on your computer, and there's some real advantages to that, and it gives you a lot of flexibility and everything. But when you're at a gig, nobody wants to set the computer up and plug it in and do all that stuff. So they wanted something where you can just plug your USB drive into it. And the Pioneer ones, they do that, and the Native Instruments ones don't. So the Native Instruments needs to make a new version of this Control S4 that runs standalone and has the USB sticks. CDJ is the standard, so I suppose it's hard for Tractor to break into the market. Yes, but I think pretty much everyone is fed up with Pioneer at this point. So, like, the issue with Pioneer is that to really get the most out of their controllers, or the CDJs, because when you go to a gig, it's going to be CDJs, right? To get the most out of those, you have to use their Rekordbox software, which is just atrocious. Like, Rekordbox is so awful. So, like, they've been so far behind, and then there's been other ones, like Denon has CDJs that are like way better and cheaper. So, like, everybody's kind of getting, and then they renamed themselves Alpha Sigma or something like that, instead of just staying Pioneer. So, like, people are kind of fed up with Pioneer, but it was like that one killer feature. If Tractor had that one killer feature, they would maybe stand a chance at taking over, but I don't know if it's going to. But I still think that this is the best controller on the market. Oh my gosh, these platters are so nice. They're so great. Platters are great. And this keyboard is great too. I have the room now. I could switch to a larger keyboard. I don't know if I'd actually use that though. We'll see if having the keyboard here, if I use it more now. Yeah, I'm not super serious into it anymore, but I will make tracks. Like I used to, when I say I'm not super into it, it used to be like I was practicing really hard and like, oh, I will send these off to a label and start getting my tracks on Beatport and stuff. But then, like, I don't go to gigs anymore. I don't do any of that anymore. I used to be every Friday and Saturday, I would be at a gig, either playing or trying to get, build up connections to get more gigs. But, that was something that it was like I would work really hard for, and I was constantly putting the effort into it, and it never really did well at becoming its own self-perpetuating thing. Because I'm just not that guy. You know what I mean? And then when we started trading especially, it was like you could wake up early, and I don't want to stay up till 2 o'clock at night. I go to bed at 9. So, but I kept making the music, and I think I've gotten pretty good at it. But I just make it, and, like, I finish the tracks out and everything, but I don't ever, like, send them to labels or, like, intend to get them published. I just make the songs. And I would say it works really well as the, like, I want to be I have some free time and I want to do something relatively low stress, then I'll do that. Because I find playing video games too stressful these days. Like the last, well, I take that back, because I was playing like Helldivers, and that's pretty casual, right? But like when I was playing Apex Legends, you know, like that's a game that I really feel like you have to try hard for, you know, and the action is a little bit sporadic. So like getting into a firefight and everything is just like really stressful. And for a normal person is probably no big deal, but like when you've got the stress of the trading on you, and the stress of a day job, and the stress of my workouts, was pretty intense, you know? And so I didn't want to do that anymore. And then I started getting into the music more and more from that. I don't really have any really good ones exported. Actually, maybe I do. Maybe I do. I'm kind of, I think I need to do more work on my drums. I'm not really happy with my drums right now. And part of that is, you know, going through like mixing them down and everything and making them all kind of consistent in the same flavor and everything. But I also think some of it is that I just don't like, you know, I don't really have my set, like the drums that I really like to use and have all of the different types and the right sample libraries and stuff. I'm just kind of like a hodgepodge of free stuff that I found that I kind of smashed together. So in this, if I can find one here, I will, that's what you'll see is, oh, you know, the drums need work. That's why they're not full video right yet. But where do I put them? Oh, over here. Is it here that I've been putting them? Oh, I don't even freaking know what some of these are. Is that clock part of, you're talking about the clock in the lower right corner of the screen? Because the clock in the lower right corner of the screen, no, that is, I'm using 11 clock. Yeah. I'm using 11 clock, and I found like a custom font for it and all of that stuff. Although, to be honest, I'm not completely happy with 11 font, but like it's the best that you can do in Windows 11, so whatever. Hopefully in a future version of Windows, they will add some of this customization stuff and make it better. So there's a lot of things about Windows 11 that I don't like. I don't remember my output. I thought it was here. Nah, you're gonna make me open up Bitwig, aren't you? Yeah, that's not gonna work. So where does it go to? If I do that, will it take me to it? There we go. Oh, is it really literally just, no, it's not that music. That music. Okay. music masters. There we go. One of the problems, though, is that the most recent thing that I was working on is a remix, so we probably can't play that. It'll probably flag the stream. Wait, where's... Yeah, we have to make it not quite so loud, because that's probably gonna, like, bust your eardrums. There you go. I used to have the tractor box encoded vinyl. Yeah, I still have the encoded vinyls. I have, well, maybe that's what I should do with the extra space, is pull the turntables out. No, probably not. But I refuse to give up my turntables, man. Maybe I should have sold them, because there was a point at which they were really expensive. Like, I think that I paid like $250 for them, and I'm starting to, and I was starting to see them up in like the $700-800 range. Who knows what? Let's go on. Maybe it's not so good. Let's go on. eBay. I think M3Ds was what I got. Well, let's go for auctions. Oh, there are no auctions? No. Where's the customize? Really? There we go. No, that's not right. Where do I do it? Oh, show only sold items. There we go. Wow, okay. Some people are selling them as high as $650. There was a period, because I think that they started selling them again, but there was a period when they stopped selling them that it was like insane. But the platters on this controller is really good. Like, I can still do all of the things that I can do on records. Like, I liked to just, drag my finger on it to slow it down a little bit and things like that. And you can do that with those splinters on the tractor. So that's what it was like. I needed to consolidate, and so that's why I did it. Because it used to be that I would always have a table next to me, and I would have the TJ set up on that table. Actually, this song is really good. I think it's a good song. There's a couple of things about it that I'm not quite happy with, but I think that the overall song is really solid. Like, I think it's a catchy tune. And it's got a good, like, it's got, like, a good emotion and story to it, I think. Actually, when I'm making songs like this, it kind of bothers me because I feel like it's like I must be copying a song that I heard somewhere else or something like that, But I'm pretty sure that this one's completely unique. And unique sounds, too. You could mix and trade. Maybe. Now that I have everything kind of set up, I probably could. Twitch is getting this new deal. So this summer, you will be able to stream mixing and not get taken down because they have an agreement with Sony and the big guys and all that sort of thing. But I never had much success on Twitch. been much better just sticking to YouTube. So I wonder, you know, if we could go back and we just put all of our effort into Twitch, if we'd be in a different spot. Maybe, who knows? On the other hand, if I had started with Twitch completely, there might have only been like 2 or 3 people ever watching, and I would have just completely given up, right? But there was definitely this one point at which we were getting like, on YouTube, we were getting like 50 viewers a stream or something, and then YouTube changed the algorithm. So I'm like, I keep thinking like I want to change the drums up, but I actually like the groove that I got going with these drums. I just need to do a little bit more processing on them. Yeah, I do like it. Anyways. I've so that sometimes my ADHD-ness, right? I'll like lose my point of reference, and it's like, and that just happened. It's like I come back and now it's like I feel like I just got here, and like everything's blank slate. Really shouldn't be though. We did push 2 ticks lower, but very briefly, and then came back to that hole at 11. So that kind of suggests to me that while we did form a pretty good liquidity hole that will probably prevent us from having too much action for the near foreseeable future, the pressure is still very much to the downside. So if we were holding a position much longer, we might be able to get more. But over the next 45 minutes, I'm not so sure. Over the next 45 minutes, I'm not so sure. Yeah, you know what? I think I do want to go to 50 millimeters and get a different lens. How badly do I want to do that? So the problem is I keep coming into is like, is it really worth the money? Because this is like $500.
Block by.
Oh, maybe it's not that bad. I can get a Sony FE 50 millimeter f1.8 lens for only $248.
Block
I
by.
thought there was a way to. Oh, okay. There's a strong buy there at 10.5. In fact, that was. Look at that. There was a 4K and a 3K hit at like the same time. That's huge. There's the G Master lenses. Oh, that's a weird one. I don't know the difference between these two. Do I want that one or do I want? That one. Or do I want like a Sigma? Beltrox, that's new. I've never heard of that. Oh, maybe one is not a, no, that one's an FE. I think FE means full frame, right? But 1.8 would probably do it. Seeing that cell makes me feel like I missed a lot. Yeah. We missed out on about we were at 13, right? So 1, 2, 3, 4, 5, 6, maybe 6 ticks. Which coming over to here, maybe $10. It wasn't a huge one, but I would have taken it. It's a Monday. If it was like, if this had happened on a Wednesday, I think I would have been much more into trying to sell it. Although I'm not 100% sure what the pressure is today, right? Like my flows that we have listed doesn't really suggest a strong imbalance one direction. It could just be the stuff going on in Europe, though. Did I put anything about that on there? No, I didn't. Maybe that's why I messed up. Okay, so you know what's something that drives me crazy about the modern internet? The modern internet is that if I want to make a tutorial or something, I want to put information out there, I will make more money from making it into a video than I will from making it on a website. And so everybody makes videos, and I don't want to watch a video. And I don't want to have to sit and watch something for 10 minutes to find out some information, right? Like, I want to go to an article. Okay, here are the best 50 millimeter, and then I can scroll down and, like, you know, get ahead of, you know, what is what. What is with contacts? Native manual focus, huh? Needs autofocus. That's one we're looking at. Don't like that one, it's too big. Good sharpness in the center, but corners need f8. Noisy autofocus. So I don't know if I want the cheaper one. Ah. No, this is the 2.8. Hmm. Hmm. Well, that didn't really help because of the way that it's organized. $9.98. You run any automated strategy? So I do a lot of stuff developing automated strategies, but I don't really have anything running right now. Next project. Oh, you know what we should be doing this morning? I don't know. It's kind of a little bit too late now. We should have been programming. I don't know. I think today I was messing with the camera and talking and all these other things that it's okay. But maybe tomorrow, if it's similarly slow, I can do a little bit more programming, because we were getting into something to I'd found the data so that the algorithm knows when there's news and avoids trading during the news. So, oh well. Anyways, yeah. Wonder if contract rollover date can be a bad time to run strategies. So it depends on your strategy, right? If it's like a very order flow dependent strategy, then yeah, getting a week into contract rollover might not be the best time to trade. Because your readings from the order flow get kind of weird around contract rollover time. Looks like we might be reversing a little bit now, because 12 was kind of high water mark from before. If they get above 12, then it could get more interesting. Still, well, they breached it by a tick, but they're still kind of sitting at 12, so I am starting to see the volume go along a little bit, at least on the short term. Something I guess I should point out that's unusual about today is that these are like average market maker positioning. And when you look at the market maker positioning from the beginning of the session, okay, this move down here just was like way bigger than almost everything that had happened before it. And so what that means is that we're like well below the the stop out zone. The stop out zone is all the way at 14, and then the average seller's cost basis is all the way at 17.5. So if we do get a pullback, if we get a meaningful pullback, it could pull back quite a bit. Like I could see them getting back to this 14 area for sure, though it might be more like 13 by the time it gets there. But like even to the 17.5-ish area. 13 would be a good target because it's a VWAP. Not necessarily one that I would want to take because the timing is kind of iffy. Cheers for the Jets. Yeah, thank you. We'll still be here for about 30 minutes. I don't know if I have a lot to say. I kind of feel like, I don't know. It's a lot going on. You know, the other thing that I did yesterday, had another picture here, was I got myself jerk blocks for, yeah, I know. And like, so that you stand it and you jerk. Yeah. But got myself some jerk blocks for a pretty good price, and I'm happy about those, even though I don't think I'll be using it next week. This next week, maybe the week after that. Plus, I'm having trouble with overhead work. I might need to take a break on anything overhead. But I got those. Like, that's all on my mind. It's a lot to, like, absorb. A lot of change all at once, I think. And the desk, like, the change of the desk, that's something that's so huge. Watch, a week from now, I'll be like, I can't even imagine how I survived before. Do people just not auction things on eBay anymore? Maybe I should just get the cheap one. I don't know if we need like super amazing looking lens. I don't know how it would compare to my kit lens. Thoughts on shorts and NQ? Well, I don't really have anything within my list of flows here this morning that suggests to me that the NASDAQ will be moving in any one particular direction. I kind of think that right now, market is likely to be relatively range bound. Now, tomorrow you get retail sales. They're looking for a core retail sales reading of spot 2 versus expected spot 2. I think there's a slight probability that the retail sales will be a little bit better than that. I'm not 100% sure how the markets will react to that, though. In some respects, it will be good because equity markets have been concerned about growth, and that will show that the growth is still robust. But then it also kind of reduces the chances of 2 rate cuts this year, and they might dislike that. So it looks like accumulation, but we're at the top of the range. Well, if you were to just go off of like the data that we can see right now, I think it would probably favor going long. That it probably favor that we continue to see a little bit of upside. I see a little bit of an imbalance long. But the issue that you have is that if there's not really anything driving the flows right now, then that means that literally anything that will happen will cancel out your trade, right? Like somebody can sneeze, one company will jump or whatever the deal is, or one, I guess in this case, if we were going long, one company has, puts out a piece of bad news or whatever, and like that's the end of your trade right there, right? So that's why, like in this situation, I prefer to just sit on my hands until I have, things that predict flows really well and suggest that there's going to be an imbalance in the orders that are going to come in. There's going to be more buys than sells, or more aggressive buys than sells, or whatever the deal is, and we'll move. So I got this new desk, and my previous desk, because it was like it was not even like a real piece of wood. It's like hollow inside. It was an IKEA furniture, right? And so you had to have like a post in the middle to prevent the table from curling in. And this one doesn't have that. And it's very nice that I don't have to deal with that anymore. Based off of 415, order flow is bearish. Well, you're seeing like on a 5-minute chart, right? So the net buy in the futures, at least, was buy, a little bit of a slight pullback, but mostly going sideways in price. So that's why I'm kind of I think I would favor going long. But like right here, this is Alice. Alice is a measure of how much opportunity there is in the market, and like below 10,000 is like really bad. So that's saying to me that there's not a lot of opportunity in the market right now. They come into a shorter term one. Okay. So yeah, they are long. Kind of. Oh, actually, I'm sorry. For mean reversion is short. So if we were gonna like mean revert, it would probably do it somewhere around here, come back, and then yeah. But yeah, I don't know. R squared is showing, kind of uncertain in terms of amount of trend. So I'm just kind of seeing a lot of meh, a lot of meh. Something weird might be happening in oil. That orange candle seems to stick out to me. Gold was kind of doing something, but it came back. Not a very, it's a Monday, and that's the thing, is there tends to be less activity on Mondays. Great information stream. Do YK GAN or I no. So oh man, Wyckoff is I need to go and read his book, but the things that I do know about Wyckoff, I think that there's some flaws in his thinking. The thing is I think that we put way too much emphasis on patterns in short terms. Like really what happened was when you're looking at daily bases and long-term trends that go over the course of months, I think there's actually a decent amount of statistical evidence to kind of back some of those things up. But when you try and apply those things to like intraday chop, I really think that you're mostly looking at noise. Because even if there was a real like inefficiency there, either because of the market structure or because people tend to do this, whatever the deal is, right? When you're talking about short-term trading, all it takes is one person to just completely destroy that trade. You got to realize the market, every order matters. That the market reacts to every order. Of course, it's an aggregate, so maybe your order doesn't really matter that much in the end, but it does have an impact. Every order has an impact. And the market reaction to those orders is quite strong. And so the result of that is it doesn't take much to ruin your trade. Right? It's a pattern to take out liquidity before going in the other direction. Well, sure, but and I do think that happens, but to go in and say I see this pattern and then I'm going to take a trade, I don't think that's a good setup. I've back tested these sorts of things. I don't know, the Wyckoff pattern is kind of a little iffy. Like making back testing that, what parameters would I need that everybody would agree is that setup? You know what I mean? But and I think that there's so again on a short term, okay, because the Wyckoff setup is kind of like you get this sort of a thing and then boop, and then it's a false breakout sort of a thing, right? Well, if it's a trend day, that just keeps going, right? So I think that it's better to just know what the orders are likely to be, know what's going on and why people are trading it, and be able to say, okay, I think large institutions are going to be involved in the market because of this. And then you see some evidence for it in the flows and then you go with it. Because otherwise, it's just noise. This is, and honestly, if we're talking about a mechanical setup, it should be backtestable, right? Should be backtestable. I don't know. Maybe the Wyckoff pattern is too vague. But that's what you'll often find is that any setup that is mechanical and you can backtest, well, then you can backtest it and you'll find that it doesn't work. And so any kind of guru or discussion that you're seeing online is going to be just vague enough that you can't explicitly backtest it. Because otherwise nobody'd be talking about it. You know what I mean? Has to take the top side, go face down. I'm two examples. I don't know. So here's the sort of thing that I do know. Okay, so used to be so here's the piece of information that I have that makes me not interested in Wyckoff. Okay, so if I'm an institution and I have to buy a ton of something, it is going to move the market. And so the question is, how do I reduce my impact? Because as I'm buying it, that's giving me a higher cost basis. And, I don't want that. I want to have as little effect as possible so that then when the thing comes along that I think is going to make it go up, I make more money. Okay. So I want to reduce my impact on the market. So it used to be that they would do this based off of a VWAP selling algorithm. So they would say, if I want to buy it and we're below the VWAP, then I can just buy whatever I want. And if I don't get that opportunity, then after a certain amount of time, then I just buy it. And what would happen is that all of the traders knew that that was the thing. They all started watching the VWAP and started just railing those guys for all they were worth, right? They're like, oh, well, we know that you're going to buy it below the VWAP, so we're just going to keep selling it on you and really, really blow it out. So eventually in 2000, or was it? No, it was 2000. No, it was it 2010. No, I think it was in 2000. This guy named Almgren and Chris, these two guys, they wrote a study they put out. And it was about the optimal execution of portfolio transactions. And what they found essentially was that if you just minimize your impact on the order book, so they would split that large order up into amounts that, you know, you would push it, and this is as far as you could go before you started to damage the liquidity. So like you push it a certain amount and you'll find this spot where like a lot trades and they'll just get stuck, right? So what they'll do is they push it to one of those spots, they'll aggressively push it to one of those spots and then back off and try and execute as much as possible in this area. And then after about 45 minutes, you can go again, right? And then you come to another area like that and go back and forth, okay? So what they did is they kind of found, okay, based on which way do you expect the market to be moving that day, what your risk tolerance are, and the time frame that you have and everything, this algorithm would basically set a schedule for when you should do your executions to minimize your impact on the order book and ergo get a better price. And they found that by just merely focusing on reducing their impact on the order book, they got better execution than they did with the whole VWAP thing, right? So this whole thing about like Wyckoff, where it's like this is all this complicated pattern to fool you into putting your liquidity up so that they can buy or sell it or whatever, right? The research basically says that for these institutions that they don't worry about that stuff. It doesn't make a difference, that they do better by just splitting their order up and minimizing their impact on the order book. So that's why what I'm looking for is I'm looking for a persistent imbalance in the book. I'm looking for, if there's a big institution, they need to buy a ton of something, they're going to have to use market orders to do it, and you're going to see an imbalance. There's going to be more market buys than there are market sells. Of course, the total number of buys and sells in the market overall is always the same, but which side is the aggressor? Because that's the one that's buying, you know, that's the big guy essentially. So if I see that persistent imbalance and it's in line, I was expecting that imbalance, it's in line with something I was already looking for, then I take my trade. Because that's what I'm looking for, is I'm looking for those hallmarks of how those large institutions actually trade. Rather than some guy from 100 years ago's theory. Makes sense? That's why I'm like, it's kind of like, patterns, but overall, like I'm a programmer, I backtest stuff. I've never seen any kind of quote-unquote pattern that on an intraday basis was very effective. The best stuff that I've seen is cycles. You can, like, there are oscillations in the market, and if you can kind of predict that this oscillation is going to stop here and go long here, there is benefit in that, I've found. Kind of a sophisticated thing in IFI though, and that's the best that I've found. So, all right, well, it is 8:55, so that is time for me to get going. I wish that earlier we had gotten into the programming. I kind of missed an opportunity to get some stuff done there, but that's okay. So I will see you guys tomorrow. We got retail sales. That's probably the most important data point of this week. So don't miss it. We'll see you guys then. In the meantime, stay excellent.